Oliver, people in the US are tweeting their gasoline receipts because the prices are so much lower, because of course oil prices are falling. Tesla, its shares are also falling, despite having announced a new model last week. I mean, really, Elon Musk has said this before, the big threat to an electric vehicle car maker is, the internal combustion engine remaining popular, isn't it?
Yeah, you'd think so, and certainly falling prices for oil and hence gasoline don't help. As you say, Tesla unveiled its latest model last week. It has better acceleration, better safety features, more self-driving capability. But despite that, the shares are down 14% since then. Now, it's got to be stressed the market's also down since then. That'll have something to do with it. And Tesla shares are very highly valued. But the low oil price doesn't help matters. The question for Tesla really, and for potential investors in Tesla, is whether buyers of these cars buy them because it's cheaper to run an electric car than it is to buy petrol. And if that's the case, then certainly the oil price would erode that advantage that Tesla enjoys.
Yeah, I mean, because I would argue Tesla is really a marketing company. And even if you're looking at it purely as a car maker, is it really just an electric vehicle car maker, or does it actually have some kind of edge in the future, which is autonomous vehicles? Because this new model, which you mentioned, does have some self-driving capability. And yes, people talk about Mercedes and BMW essentially outpacing Tesla at some point in terms of building EV capacity, but they're going to be quite conservative in doing that, and then they're not going to put the capital spending to work in terms of developing the frontier here. Whereas Tesla, as shown in the high, very high price multiples you're paying for the stock, it's essentially betting the farm on that kind of capital spending.
But I'd argue that BMW and Mercedes perhaps will put a lot of capex behind this. If they see Tesla growing in the luxury car end of the market in the States, as Tesla has been doing, then the other car makers are going to say, well, we're losing sales here and potentially high margin sales, so it's going to be worth them putting money into it. Tesla, you're right, is a very good marketing company. It has great leadership in electric vehicles. The question is whether they can sustain leadership in autonomous cars and self-driving cars, or whether someone else can build a technology and use that in a competitive vehicle, which just erodes the advantage that Tesla enjoys at the moment.
Now, I mean, the last point here is, well, we seem to be disagreeing about how big the ultimate market is for electric vehicles. I mean, you're talking about the threat to Tesla from luxury car makers, but when they're building this $5 billion gigafactory, which will be sort of spitting out more lithium-ion batteries than the world makes overall at the moment, Tesla's clearly eyeing the mass market. And so really, I mean, will mass market car makers really try and outpace Tesla here?
They might do already. Nissan has its Leaf. GM has also introduced the Volt, its own electric vehicle into the market. So certainly the mass market's going for it. And the Gigafactory, in a sense, is a hedge. Tesla's saying, well, if the Tesla brand doesn't make it, at least Tesla, the company, will have this big factory that can potentially make batteries to sell to other mass market car makers. So it's a slight hedge there if the mass market does grow. But as you say, it's very difficult to know how big the market will grow. And if the oil price keeps falling, then it erodes the price advantage.
Yeah. Watch those internal combustion engines still. Thank you, Oliver.